Dr. O, every Monday at the Center Square, you publish a column. I think maybe, in my opinion, the most straightforward, easy to read, made for, the average person. Look at what's happening in the economy and what to expect in the week ahead. And on your list for this week, you've got two key items I'm sure that you're going to spend some time with. The Consumer Price Index comes out, some interesting data that's attached to that. Then, of course, the Producer Price Index also comes out this week. So let me turn it over to you. What are you looking forward to in the week ahead?
Well, the CPI, of course, the first of the month's inflation reports is going to be, is definitely going to shake markets, right? I think post Liberation Day, everyone started tracking, supply, container ships coming from China and everywhere else. And there's this fear that potentially you could end up with empty shelves, and empty shelves tend to push prices higher. We call them supply shocks, right? Consumers come in, they're looking for stuff. There's a shortage, prices start to soar. And that's exactly what, the pundits have been claiming, right? That potentially you're going to get an uptick in inflation as a result of the trade war. Is not completely unfounded. I think the economic theory tells us that we're probably going to get a temporary price increase, or at least a big one-time price jump. But then, where is the other impulse going to come from, right? The economy is going to adjust to the new reality, and price growth ought to continue to ease. Now, of course, last month, the CPI showed a negative print. On a month-over-month basis, the CPI fell slightly. On a year-over-year basis, the core CPI was down to 2.8% from 3.1%. So a big decline, right? On a year-over-year basis, the CPI was down to 2.4% from 2.8%. So we have seen the easing, as consumers pull back, consumer spending pulls back. Prices, of course, are also expected to ease faster.
Yeah. So, I mean, I guess to drop in on that specific subject, I mean, because there's a lot of talk about what's going on in the economy. It's a fascinating time, right? And now, everybody in the news business is an expert on the economy. And then we're seeing headlines that are flying all over the place, and, the container ship traffic reports like we've never seen them before. As far as it goes at this point in time, I mean, to simplify this and put kind of a fine line on it, we're actually seeing price easing right now.
Yeah, that's right. Yeah, and that's good. That's what we were waiting for.
Yeah.
That's what we wanted. Right? We wanted to the Fed wants to bring inflation under control. We want price growth to ease. I think what we don't want is the economy to crash, right? We don't want,
of course not.
We don't want to go into a recession. And so we have to be careful. And I think the Fed has to be careful in its approach, because, if it waits too long, the economy could head into a contraction. But I think the Fed is doing the right thing. It's looking at the incoming data, and here's what it's realized. Initial claims, the labor market's still in a pretty good place. Yes, of course, businesses are not out there investing and hiring more workers at a rapid pace. Hiring rates are low, but businesses are not firing anyone either. Layoffs are very low, right? And so they're holding on to workers. The employment growth has eased, but is still in a pretty good place on average. I mean, we're relative to the monthly employment gains before the pandemic. We're right in the range, 150,000 to 170,000 jobs every month. Pretty normal to me. Yes, of course, there are concerns that could slow down even more, in the months ahead.
Right.
But I think the Fed is, has basically done everything it can to indicate to market participants that should that happen, they will step in to support the U.S. economy. And so we're okay. I think we're okay. It's not time to raise the alarm quite just yet.
So let me ask you this then. Why is it that so much, and I want to lay this out, on, I think, primarily, legacy mainstream news keeps talking about recession. What is it in the numbers that where is that coming from? You and I talk about this. We look at the same numbers that everybody else looks at every week. Why is it that we keep hearing about recessions now, and the numbers don't belie it? There was even a headline in the New York Times, was recession warnings are everywhere except in the data. Well, I mean, isn't that where recession warnings would frankly, be signaled?
Well, I mean, the headline says it, right? So, I guess the issue is like you're looking at consumer confidence. You're looking at business confidence. It's tanked essentially. You have, and we saw a little bit of that. I can't remember what was it, start of 2022 or 2023, where we had the negative GDP print.
Yes. And we were in a quote unquote technical recession at that time.
Yeah. And at the time, the employment growth was through the roof, right? Today we have a slowing labor market. Just okay. And in fact, I call it an okay labor market that is somewhat teetering on the edge. And I think that's what worries people. I think when you have low confidence, consumers tend to pull back. And when they pull back, businesses start to, profit margins start to shrink.
Yes.
When profits margin starts to shrink, businesses start to lay off workers.
Right.
We don't really want to get into that scenario. And I think that's why people are trying to get the Fed, or at least are hinting at the Fed that it needs to be proactive in protecting the U.S. economy, right? The other thing is, I think my last point is that it's important to understand that tariffs are a tax, and that tax hikes on businesses and consumers, essentially, added to government spending reductions, right, could further dampen aggregate demand, right? So if we spend less on aggregate and profit margins shrink, right, then businesses will have to protect those profit margins by laying off workers. And we have to be careful. And I think the Fed is doing, again, to reassure our listeners, the Fed is paying attention and is prepared to act. We just got initial claims yesterday. Initial claims headed back down. If you look at the 4-week moving average, they're not rising all that much. We had a little fear last week, but we're okay. And we could take a deep breath. Things are going to be just fine.
Well, I appreciate your thoughts as always, though.